Thank you for joining Market Insights. I'm Jack Thurman, president of BKD Wealth Advisors. The U.S. debt crisis has been the leading news story for the past several months, and Congress has approved a last-minute agreement to raise the debt ceiling and reduce federal deficits. Today, I've asked Jeff Lehman, our Chief Investment Officer, to address some of the common questions we're receiving from our clients concerning this action and what it means to them as investors and consumers. Jeff, what significance does this agreement have for the typical investor or typical consumer?
Well, Jack, the deal itself won't have much effect on the typical consumer, but what has affected the consumer is that all of this political wrangling of the last several months over these issues has really eroded consumer confidence in the ability of our government to solve these issues. This is a necessary first step, raising the debt ceiling, but the bigger issues are still out there and remain to be resolved. We'll have to stay tuned over the next several months to see what transpires, and particularly as it pertains to the deficit reduction plan that accompanies this raise in the debt ceiling, and how that's going to impact both the consumer and the economy over the next 10 years.
Jeff, give us your thoughts on how the markets reacted prior to the agreement and post-agreement. What are your thoughts on this?
Well, Jack, the markets haven't responded very well. Really the combination of concern over the debt situation plus some deterioration in economic data in recent weeks, those things have really put investors in a sour mood. In addition, consumers and businesses seem to be retrenching a bit based on the uncertainty that they see surrounding all of these issues. Interestingly, the spending cuts that accompany this compromise may not be enough to allow the U.S. to maintain its AAA credit rating. But by the same token, those same spending cuts may be enough to push the economy back toward recession.
So with this in mind, what should investors keep in mind as well as consumers keep in mind in the midst of all this uncertainty?
Well, the most important thing for investors to understand is that we will experience more bouts of volatility like we've had in recent days as we work through these issues. This is very typical when recovering from the sort of downturn that we had in 2008 and 2009. But it's not a time to make drastic and emotionally charged investment decisions. If a person, an investor, has a portfolio that's well diversified, it's been constructed with their risk preferences in mind, the best approach today would be to stick with the strategy and the plan that's in place. On the other hand, though, there are some things that consumers should be doing in light of all these debt discussions and potential future spending cuts. And the first is to stay informed as the legislators work through this plan, because there will be things that affect most people, and it's important for each individual to understand how these changes are going to impact them and their financial situation. As it pertains to investing, really the key thing is to be cautious and thoughtful. Make investment decisions based on sound analysis. Once again, not based on the emotions of the day. And then finally, just as at the government level, we need to monitor our own financial situation and not get overextended. Maybe think twice about taking on significant new debt. The key thing is to take some precautions today to better prepare for whatever comes about tomorrow as we continue to work through these issues. I think we should all learn a lesson from what's happened at the governmental level, that spending beyond your means doesn't work out real well over time.
So with all this said, are you optimistic or pessimistic going forward in the investment markets?
My feeling is that what's happening is a necessary thing. We've got to get our house in order as a country in terms of spending, and there'll be some pain associated with that in the short run. But I think longer term, I'm very optimistic that we'll work through these issues and we'll be better off a couple of years down the road.
Thank you, Jeff. As market and economic events occur, which impact our clients and raise common questions, we will continue to provide these informational broadcasts. For more information about BKD Wealth Advisors, please visit our website at bkdwa.com. Thank you for joining us today.